Hello everyone and welcome back to this channel US Selena Talks. This is Selena and welcome to my channel. Here I discuss everything related to stocks and also geopolitical risks influencing the financial market. Before we dive into the individual stocks today, let's start with a quick look at some of the major news stories influencing the market. Recently, investors have been closely watching developments around global interest rates, geopolitical tensions in the Middle East, and continued growth in AI investments. These three themes are shaping market sentiment right now. First, central banks remain cautious about inflation, which means interest rates could stay higher for longer. Higher rates typically put pressure on growth stocks because future earnings become less valuable when discounted. And second, geopolitical tensions in energy producing regions have pushed oil prices higher, as you've seen crude oil going back to the $100 level. And rising energy prices can increase inflation risk and add volatility to the market. Finally, AI intelligence continues to dominate investor attention. Major technology companies are investing billions into AI infrastructure, which is creating strong momentum in semiconductor and cloud related stocks. With that context in mind, let's talk about the broader market outlook. Looking at the overall market, the key question investors are asking right now is whether the rally can continue or whether we are entering a consolidation phase. The market has already experienced a strong upward move over the past months, especially driven by large technology companies. Because of that, valuations in some areas are starting to look stretched. In the short term, the market may experience volatility and sideways movement. This is actually healthy because markets rarely move in a straight line upward. Periods of consolidation allow earnings to catch up with stock prices. From a macro perspective, these are three main focuses currently driving the market. First, AI investment and technological innovation. This is still the biggest growth narrative in the market. Second, interest rate expectations. If inflation costs cools faster than expected, the market could anticipate rate cuts, which would be very bullish for equities. Third, geopolitical risk, which can create sudden spikes in volatility. Because of these factors, my current strategy is cautious optimism. Long term trade trends remain positive, but in the short term, investors should focus on strong companies with solid fundamentals rather than chasing speculative momentum. Now, let's move into the individual stocks and analyze their positioning in the market. Let's start with Tesla. So, hey, Tesla remains one of the most controversial and widely followed companies in the market. In one hand, it is still the leader in EV innovation and autonomous driving technology. On the other hand, the company faces increasing competition from both traditional automakers and new EV startups. From a market perspective, Tesla's stock often moves not only based on vehicle sales, but also on investor expectations about future technology such as autonomous driving and robotics. One key factor investors are watching in Tesla's expansion is AI and robotics through projects like the Optimus robot. If Tesla succeeds in these areas, the company could eventually be valued more like a technology platform rather than just an automaker. However, in the short term, Tesla faces margin pressure due to price competition in the EV market. Therefore, investors should watch delivery numbers, profit margins, and any updates on autonomous driving progress. Overall, Tesla remains a high growth but high volatility stock. Next, we move on to Nvidia Corporation. So, Nvidia has become one of the biggest winners of the AI revolution. We can first draw our support level. Combo resistance zone. Okay, so the company dominates the market for high performance GPUs used in AI training, data centers, and also gaming. And large Technology companies are investing billions into AI infrastructure, and most of the infrastructure currently relies on Nvidia chips. Because of this, Nvidia's revenue growth had been extremely strong. However, the challenge for investor is valuation. When a company grows this fast, expectations become very high. The key question is whether NVIDIA can continue to maintain its technological lead over competitors. For now, NVIDIA still has a significant advantage in software ecosystems, particularly CUDA, which makes it difficult for competitors to catch up quickly. As long as AI demand remains strong, NVIDIA could continue to be one of the most important companies in the tech sector. So, next we move on to Apple. Apple is very different for companies like Nvidia or Tesla. It is a mature company with stable revenue streams and a massive global ecosystem. Apple's strength comes from its integrated ecosystem of hardware, software, and services. Products like the iPhone, Mac, and iPad are tightly connected with services such as iCloud, Apple Music, and the App Store. In recent years, Apple had also been focusing heavily on services which generate recurring revenue and have higher profit margins. Another long-term growth area for Apple could be spatial computing and augmented reality, especially with new devices entering the market. For investors, Apple is often seen as a defensive technology stock, meaning it tends to be more stable during periods of market volatility. So, next would be Oracle here. So Oracle has quietly become an important player in the cloud computing industry. While companies like Amazon and Microsoft dominate headlines, Oracle has been rapidly expanding its cloud infrastructure business. A major driver of Oracle's recent growth has been demand for cloud services that support AI workloads. Oracle is positioning itself as a provider of high performance cloud infrastructure optimized for AI training. If this strategy works, Oracle could benefit significantly from the long term expansion of AI computing demand. So, next we go back to MSFT, Microsoft 401. Okay, if we go back to from 32 time, we go back to our resistance zone here, okay, with an important zone around this area. So, Microsoft is still one of the strongest companies in the world when it comes to combining software, cloud computing, and AI. Its cloud platform, Azure, continues to grow rapidly, and Microsoft has also integrated AI technology into many of its products, including Office and enterprise software tools. Microsoft's partnership with OpenAI has positioned the company at the center of AI transformation, happening across industries. From an investment perspective, Microsoft benefits from both stable enterprise revenue and high growth AI opportunities. The combination makes it one of the most attractive long term technology companies. So, this was all for today. I hope you had a great time watching this video. I hope you guys have learned a lot about um, what's happening in the market right now. So, I want to put you more in into the market and for you to know what's happening inside the market, because if you want to summarize everything we discussed today, we could say the market remains driven by three key themes: AI investment, interest rate expectations, and global geopolitical developments. Technology companies connected to AI infrastructure continue to dominate market performance, but investors should also pay attention to valuation levels and potential short term corrections, such as here. Diversification is important, especially in uncertain macroeconomic environments. So that's all for today's market analysis. Thank you to everyone who left thoughtful questions and comments in the comment section. I really appreciate your engagement and your support for the channel. If you enjoyed this analysis and would like more updates on the market and individual stocks, don't forget to like the video and subscribe. And of course, feel free to leave your questions below. I may feature them in the next video. Thanks for watching, and I'll see you in the next market update.